Interest Rate Professional iPhone, iPad, and iTouch application covers annuity, compound interest, effective annual cost, effective annual rate, nominal and real interest rate, perpetuity, and simple interest. Let's take a look at annuity. So let's say annuity being paid is 1,000, interest rate is 5%, growth rate is 3% for a period of 10 years. So an annuity is being paid in arrears. So this is what the value is. If annuity is paid in advance, in case of insurance company, the premiums are paid in advance. So that's the value of the annuity paid in advance. So now let's play with the growth rate. So if the growth rate exceeds the interest rate, we are talking about arrear. So this is what the value is. So this will occurs in advance. This is the value is. If the growth rate equals to the interest rate, the value of the annuity paid in arrear, the value of the annuity paid in advance. Compound interest. So we supply, we make a deposit, interest rate is 5 years. Say the period is 5 years. So by default, the compounding occurs on a monthly basis, and continuously compounding interest. So interest plus principal is this amount, interest continuously compounding is 1284. Now say if the compounding is taking place twice a month, this is the value. If the compounding is occurring every week, then this is the value of it. If the compounding is occurring every single day, so it is going to get much closer to the continuously compounding interest rate. So effective annual cost. This is useful in comparing machines of unequal lives. So we are comparing two machines to see which one is better in terms of maintenance cost. Because the initial cost purchase price is important, but the maintenance cost is equally important. So say $1,000 and occurs at starts at first year, repeats for 5 years. Life of the machine is 5 years. So that's one machine, and maintenance cost 5 years maintenance cost. So now say at 5% interest rate, we will calculate the ESC, effective annual cost. Now let us do the same thing. What we'll do is we will basically, let's clear up everything. So now $2,000, and sorry, the expense, let's make it reasonable, 10050, and it can happen at first. So 5 years. Now we add the expense. Now we are saying it's the same interest rate, and this is the ESC. So we see there is a difference in ESC. So we can keep on adding the maintenance cost for every year also. Let's clear up all that. So we'll add, say, first year. At the end of the year, it will start by default at the end of the year. Say it doesn't repeat, so we add that. So second year we said 1050, and we adding that expense. Similarly, say third year 2000, so maintenance becomes expensive. So now let us say at 5%, what is the ESC? So this is what the ESC of the machine. So effective annual rate. So annual percentage rate, effective annual rate will change based on the compounding frequency. So 5%, the APR, so compounding frequency is 12. So 5.1162 becomes effective annual rate, and if it is continuously compounded, 5.1271. So now, just like compound interest, let's increase the frequency. So now they increase the frequency even further. So we see that. Now let us increase the frequency even further. So we see that it is pretty much approaching the continuously compounding effective annual rate. So nominal real interest rate. You can supply inflation, nominal interest rate, or real interest rate. As long as two are supplied, it will calculate the third one. So inflation is 3%, nominal interest rate is 5%. Say what is the real interest rate? Okay, so if 1.94 is the real interest rate, what is the nominal interest rate? So if 5% is nominal, 1.94 is real, what is the inflation? Okay. Perpetuity. Say cash flow is 1000, so interest rate is 5, so no growth rate. This is the value of the perpetuity. If there is the growth, so 5000. If the interest rate and the growth rate they are the same, it cannot be determined. So if it is 6, okay. So now simple interest. So simple interest, you have a deposit 5 year and 5%. So this is the interest. Okay. With this, we just covered annuity, compound interest, effective annual cost, effective annual rate, nominal and real interest rate, perpetuity, and simple interest rate. To find more about this app and other apps, please visit businesscompassllc.com. This application is also available in the Android platform. So if you visit businesscompassllc.com, you'll see mobile banker, time value of money professional, consumer finance, bond, option, depreciation, forward future, NPV IRR, T-bill, G-score, valuation, Monte Carlo simulation, yield curve, what if analysis and amortization. And under science, you have multiple calculators, units of measurement, statistics. So please take a look at the site. Thank you very much.